Without further ado, I'm going to get started. Good day, ladies and gentlemen. My name is Darius Liu, a co-founder and COO of iStocks. And a very warm welcome from the iStocks family to you. And thank you for dialing in. Now, I'm personally very honored to host tonight's webinar entitled How COVID-19 and the Rise of E-commerce are Reshaping Real Estate Investing. I'm sure everyone here will find tonight's presentation fascinating and exciting. Our speaker for tonight is Mr. Enoch Tan, Portfolio Director of Elite Partners Capital, or EPC. But first, a brief intro of EPC. Now, EPC is an alternative asset management firm specializing in the global real estate markets and other yield accretive assets. It is also the sponsor of Elite Commercial REIT, the first sterling-denominated REIT to be listed on the Singapore Exchange. Elite manages over 1 billion euros worth of assets across several funds. Mr. Enoch Tan himself, our speaker for tonight, is Portfolio Director for EPC, where he manages the logistics fund. He was a former senior banker, most recently a CIO of a fintech company, and prior to that held managing director positions in Standard Chartered Bank and Royal Bank of Canada. He was also an investment banker at UBS and Rothschild for several years. Enoch has a legal background and has practiced as a finance lawyer in leading law firms like Allen & Gledhill and Linklaters. So welcome Enoch to share with us his insights tonight. And as for myself, my name is Darius Liu, co-founder and COO of iStocks. But before iStocks, I was doing portfolio strategy and asset allocation at GIC, the Singapore Sovereign Fund. And before that, in various other capacities in the Singapore Government Service, including stints at the Investment and Reserves Department at the Ministry of Finance. Now, a short introduction about iStocks before we plunge right in. iStocks is the world's first regulated issuance, custody, and trading platform for digitized securities. Now, iStocks is based in Singapore and regulated by the Monetary Authority of Singapore as well. And our vision is to give equal access to the financial markets through a regulated, transparent, and community-driven platform. We are very, very proud to be able to bring to our users interesting and exciting investment opportunities. So do go to istocks.com and sign up for an account to check out all our offerings that we have brought to the market. Let's invite Enoch to share with us his insights on real estate. Now, hand the time over to Enoch. Please take it away.
Thanks a lot, Darius. Very pleased to be here tonight. Let me just share my screen, take over the presentation here. And thanks for hosting me tonight. Thanks to the iStocks family for hosting us tonight. Pleasure to be here speaking to everyone, and a good day to all of you. Just very quickly, today we're going to talk about something that's quite close to our hearts, the real estate investing, especially during this current economic climate with COVID-19 and the way the world is changing because of that. But quickly before we start, just a quick introduction on Elite Partners Capital. So as Darius very kindly mentioned earlier, we are a Singapore-based asset management firm. We are predominantly real estate managers. So I think 90% of our portfolio is in real estate, and all of our real estate is in Europe at this point in time. So we manage over £1 billion of real estate assets across two strategies. One of which will be logistics, which is what the topic which we're going to talk about today. And the other one is a UK commercial sovereign-led assets in the UK, which is a part of the strategy we listed as the Elite Commercial REIT earlier this year in Singapore. So as far as logistics is concerned, we are currently in 5 different countries. So we have assets in Poland, in Germany, in the UK, in Spain, in Czech Republic. And so these are the areas that we kind of focus on. We'll talk a little bit more about why we like these places and why we think these are very interesting investment opportunities. But that's where we are at the moment. And as far as the type of sectors that we're in, logistics obviously, but within the logistics space, we are focused on 3 major themes. One of which is e-commerce. The other one is food distribution, food storage, and then the last one, transport hubs. So we'll talk a little bit more about that and why we like this space later in this event. Darius, back over to you.
Thanks, Enoch. The fireside chat format that we have tonight would see me posing a couple of questions to Enoch, and he'll give his replies. And after that, I will open it to the floor for questions. So Enoch, the first question I have for you, what are some of the emerging trends we see in real estate investing?
So basically what we are looking at now, if you look at the real estate spectrum, right, you look at what has happened in the last 6 to 9 months around the world with this COVID-19 situation. The main themes in real estate would be in two major sectors, I believe, one of which would be data centers and the other one is logistics. Broadly speaking, a lot of these themes tie into e-commerce and technology because of the growth of e-commerce driven partially by this pandemic. The demand for data centers and demand for logistics assets has been growing steadily over the last 6 to 9 months. On the back of it, of course, various other real estate sectors are also not doing so well because of lockdowns, because of various other governmental measures taken to combat this virus. Hospitality, for example, retail has taken a big hit, F&B, health, leisure clubs, even office to some extent. And I'm sure there are a lot of discussions around the world now about what is office space going to look like post-pandemic? Are people going to be working from home? Are they going to be going back to work? Are companies going to reshuffle the way they staff their offices? Are people moving to the suburbs? Things like that. That are real existential questions that are being asked of the commercial real estate sector at this point in time. For us, we are focused on logistics. This is obviously not a sector that we just decided to do this year when the pandemic started. We've been focused on logistics since 2017. At the end of 2017, early 2018, when we started our fund. The reason for that is actually a longer term a view on our side that logistics is something that has historically been quite under invested by investors, and everyone's looking at prime residential, everyone's looking at prime commercial, and for a very long time until recently looking at retail as well. But industrial and to more specific extent, logistics has been not so much the focus of global investors until the last few years. We're starting to see a lot of very large institutional investors piling into this space. In Europe in particular, of course, Asia is always a very hot place for investment for global investors, and we've seen a lot of investments in real estate on the Asian side for logistics, for example. But Europe is starting to become very interesting for global real estate investors as well, for a few reasons. Firstly, because a lot of capital has already been invested in Asia and also in the US. So Europe is kind of, as between the three, probably the laggard in terms of global capital flowing towards the real estate side. Secondly, real estate investing is always partially influenced by cost of capital, and interest rates in Europe are at a historical low point and are expected to remain that way for a while. And so that therefore you can get very good interest rates and therefore very good returns on your real estate investments in Europe at this point in time. Then if you look at the various countries in Europe, after the Eurozone crisis of 10 years ago, I think many of the European countries restructured economies and starting to see them come out of it even stronger. And so as a European Union of 500 million population, this is not a market to ignore. And also the opening up of Central Europe, opening up of Eastern Europe, many new opportunities have opened up for real estate investors to invest in, aside from the traditional investment havens like the US, like UK, for example, and in Germany. So a lot of investors, institutional, private, both are looking at other markets in Europe, looking for yield, looking for good opportunities.
Thanks. So you mentioned COVID-19 and certain trends like e-commerce. So how do you see COVID-19 and longer term changes in consumer behavior, and how do you see these trends changing the way how savvy investors look at investing in real estate?
So as I mentioned earlier, COVID-19 has had quite a large impact on e-commerce. E-commerce is probably one of the biggest beneficiaries of this COVID-19 because obviously everyone's staying at home, everyone's ordering their food online, their groceries online, they're doing everything online. So this has had a great impact and great benefit to the e-commerce space. Let's just look at I'm just going to show a couple of slides to you guys. If you look at the what has happened, this is just anecdotal, right? But if you look at companies that have had e-commerce presence or omni-channel that allows them to deliver their product or their services to clients using an e-commerce platform or internet platform, those happen to have been doing a lot better than those guys who don't have that. So you look at traditional retailers, for example, who don't have an online presence, they will suffer significantly more than those who did. So that's just one example of how e-commerce has really has really benefited from this COVID-19 situation. But aside from that, actually, this has been a trend that has been we have seen over the last few years. So e-commerce is not something that happened overnight. So consumer behavior is driven by technology, driven by the ease of ordering goods, ease of ordering services, ease of transacting online without the need to physically go somewhere else. That is something that has been taking hold in various economies around the world, and because of COVID-19, it's probably now something that is mandatory for everybody to be able to use. Practically because of practical reasons, because there's no other way they can otherwise transact. Because of technology, because of this has also changed as a result, changed consumer expectations in terms of the kind of services and the kind of goods that they would like to get their hands on. So in the past, perhaps you might be able to accept 1 week delivery, right? Now you want it same day, you want it by the next day at the very latest. So these are consumer behaviors which over the last few years, we've already seen the growth of that. But what COVID-19 has done is essentially accelerated the whole process. A lot of people are at home, they can't go out. What do? They buy stuff online. They interact with each other online. So these are things which we see are major drivers as a result of this COVID-19. Moreover, it's not just the retail side, but also the B2B part. Because the B2B segment is also adopting technology in a very large way. We see that in a lot of our tenants. We see that in a lot of the assets that we acquire, where it's not just naturally e-commerce, but also the typical supply chain traditional businesses, which are also now adopting the e-commerce model. So not just B2C, but also B2B, where consumers can interact with each other online. And therefore, the requirement and the necessity to deliver goods to each other within a short period of time is very, very important. And on top of that, also what we see is the development of many different, especially in Europe, many different, as I mentioned earlier, Central European countries, Eastern European countries, the opening of these economies has also led to the growth of e-commerce, because these economies are getting more affluent, people are getting richer, and so therefore the demand for goods is higher. But all this was already happening, as I mentioned, happening 2-3 years ago. But what has happened in the last few months, about the past 9 months or so, is that COVID-19 has forced the adoption of this new technology, the adoption of these new practices, even much more than maybe perhaps it would have otherwise happened naturally.
So it's a very interesting point, that you brought up, right? So the logistics sector has clearly demonstrated its defensive characteristics, right, in the last 9 months or so with COVID and everything. So do you see the logistics sector as generally one of the most defensive asset classes, especially maybe in Europe? And if you agree, why is that so?
So yeah, I naturally would have thought that logistics would be one of the most defensive sectors, because this is one sector of real estate that is still being utilized. So if you look at all the other spaces, office space, people are not going to work, people are working from home to some extent. Of course, that's improving now. Retail has been shut for a long time, hospitality even worse. So you just purely on the usage of this class of real estate, this is an asset class that is doing well. So if you look at some of the data that we have, and by the way, this data is stuff that we have in our own portfolio, right? So it's not that we see this also in our portfolio. If you look at this chart over here, over the last, over the 2020 period, you're looking at the industrial. Industrial here is the broader sector that logistics is in. In terms of payment of rentals, we are seeing very high collection of rentals in the industrial space. Logistics will be a little bit higher than this. So if you look at the leisure space, which will be F&B, wellness, it will be below 50% at some point. Retail is also suffering quite badly. Things are obviously improving in the last quarter, but with the new lockdown happening in Europe, we're starting to see the numbers being pushed down again. Office is also recovering, but at a point in time earlier on this year, it was also under a lot of stress. But so if you look at on the defensive sector side, if you're a real estate investor, what you care most about? Preservation of value, of course, is one, but most importantly, you want your tenants to be paying rents, because that's your cash flow, right? So it's an asset class where the tenants are still paying rents. So to give you an example, in our portfolio, we own currently about 11 assets. We will have about 22 assets by the end of this year. We have been collecting rents, 100% of rents this entire year from all our tenants. So that speaks about the strength of the real estate sector in this space, and also the ability of our tenants to pay rents is quite critical in this period of time.
Sure.
The other thing we want to look at is, sorry, I'm just looking for this slide. If you look at logistics investments in Europe, that is something that's been growing over the last few years. We are seeing, because of COVID, we're seeing an increase in volume of transactions this year on the logistics side. So anecdotally, and this is borne out by what we're seeing in the market, because we're out there looking to buy assets. In other sectors in real estate, you're seeing price pressures. So looking at perhaps some distressed portfolios, people looking to sell assets. But on logistics side, we see the prices of the assets not necessarily going down. In fact, if you're lucky to get the price that we got last year, in fact, year on year, you're looking at, depending on which markets you're in, anything between 5 to 10% growth in value, maybe more in some countries. But even despite COVID, we are not able to find distressed assets in the market. So things are still trading at what they were 6 months ago, 9 months ago. So this also goes to show that this asset class is very defensive.
Very interesting. Just to, on a slightly different topic now, One Belt, One Road, right? We've heard a lot about it. And I would like to ask you, how is the European logistics industry actually leveraging on some of the improved infrastructure arising from One Belt, One Road or other sorts of infrastructure initiatives?
So One Belt, One Road is obviously one of the key drivers for the growth in global trade. Of course, the growth of affluence of various different countries themselves, and also the ease of doing trade between continents, between Europe and the US, Europe and China. These are all the main factors. So One Belt, One Road is one example of where we see this the trade flow between Europe and China growing. It's really been happening over the last few years. So one example I want to bring out, and this is something that we know quite well because we have assets in this area. There is this One Belt, One Road on this railway from this city in Chengdu to the city in Łódź in Poland. And so this train has been running for the last 5 years or so. And it's a very important train because this is the trade route that otherwise would have been taken by ships in China all the way to Europe. And typically that journey takes about 30 days. But now because of this overland route by rail, it's about 14 days. So it cuts the journey by half. And historically, if you look at the flow of goods from China to Europe, it's always been kind of one way, right? So you hear a lot of stories from transportation companies about how ships and how trains go to China, go to Europe one way and then come back empty, right? So that has been a feature of global trade for a while. But what we've seen in the last few years is something quite different. So you have trains that go from China to Europe, and these will be filled with electronics, pharmaceuticals, industrial goods, machinery, stuff that China typically makes and has been making for the last few years. But what we're seeing is that the trains going back to China are also very full, because what you have is Chinese consumers getting wealthier. Tier 1 cities in China, like Shanghai, Beijing, for example, are very rich cities, and the people there, they buy things online. They love to buy European things, right? So you have stuff that goes from Europe to China, things like food products. So food products from Italy, from Spain, from Scandinavia. You have electronics from Germany, for example, automotive parts and automotives from Germany. These are all the other types of goods that we see flowing from Europe to China. So now what does this mean for logistics? This means that there needs to be a growth in logistics assets, logistics infrastructure around this One Belt, One Road initiative, because obviously when your train stops, you need to unload the goods. The goods need to go somewhere, need to be sorted, and then be moved to various different parts of Europe on one end, and then China obviously on the other end. So that's kind of one of the things that we are seeing, and is actually one of the drivers for growth in certain parts of Europe. The other thing that is interesting about the European logistics, and part of it is caused by this China One Belt, One Road, is that historically Germany, because of its location, right? Germany, because of its location, was traditionally a main logistics hub. So most of the goods going through Europe would kind of go through Germany. But now, because of firstly the growth of the growing affluence in Central European countries like Poland and Czech Republic, these countries are, number one, become more viable consumers. So the people that start buying more things, middle class is growing, getting more affluent. Secondly, because of the China trade, Poland has become more important because you just look at the map over here. Poland has a cost of labor which is 1/3 of everywhere else in Europe. except for Spain and Portugal. But if you look at Germany and the rest of Western Europe, you're looking at maybe 30 to 40 euros per hour. Poland is 10 euros per hour. Now, in the logistics space, you have logistics companies that are very price sensitive because the margins in this business is quite low. It's a high volume business. So you can't have like guys who carry boxes, sort boxes, forklift drivers making 35 euros an hour. That is not something which I guess a lot of logistics companies would be able to stomach, and also then ultimately drive costs for consumers. So therefore, what we see is a lot of logistics operations happening in countries which are have a lower cost of labor. That said, you can't just say, I'm just going to put it somewhere where labor is cheap, because the location has to make sense, right? So Poland, where it is very central in Europe. It is in a way the first point of when, let's say, goods coming from China through the rail, they have to stop in Poland, they break bulk, and then last mile delivery to the rest of Western Europe. So that's kind of one of the themes that we're seeing, and we are very heavily invested in this particular theme.
Very interesting. Poland does really sound like a very exciting economy to keep an eye on. A question from the floor for Enoch. What kind of net yields can be achieved in current interest rate environment in UK versus Germany versus Poland?
So, okay, this is a very interesting question. So let me see whether I have a slide that can talk a little bit about this. So if you look at this slide, and actually this is an interesting slide as well. If you want to look at, if you are a holistic real estate investor looking at across all sectors, and you're asking this question, why logistics, why industrial, why not just buy prime UK London office or high street shops, right? So this will be a very interesting chart. If you look at the prime use in the asset classes, and this is why I mentioned earlier about how a lot of large institutional capital is really looking at logistics in a very large way. The trend of the yields of logistics historically has been very much high, obviously very high compared to everyone else, but is tightening significantly as opposed to the other asset classes. So you look at offices, for example, and retail, they were very tight for a while, and they're starting to creep up. This is up to 2020. I expect 2020 it will shoot up quite high because of what's happening in the markets, and logistics is still a downward trend. So you look at this chart, you look at where the yields are coming down, and you're thinking to yourself, okay, so if I will buy, let's say we take 5% as a mark here, right? If I'm investing in, would I invest in 5% logistics if I can get 5% office, or maybe 1% 4% high street store, for example, right? So why would I be looking at that? Where is the growth in that sector? Now, then I'll refer you to the left on the prime rents. This is quite interesting theory that we have, borne out by our own experience in the market. You look at the difference between office rents, high street rents, and industrial rents, and you see the big gap, right? So if you, let's look at Manchester, the easiest to look at the one at the bottom. If you look at Manchester industrial, it is maybe a fifth of office rent, and office rent is maybe a fourth of high street rents, and therefore logistics industrial rent is a 1/20th of high street rent, for example. So therefore, if you look at this, rentals in logistics/industrial space is still a lot cheaper than what you get in high street office. Which means what? Which means that where you have growth, which is the sector which is the most expensive. So high street obviously very expensive. With the pressure because of COVID and people can't go out to shops, we expect to see a lot of these price pressures hitting the rents per square foot, per square meter in this case. Office to some extent as well. And the industrial is still very cheap, right? Logistics is very cheap. So therefore, there's still room to grow. Add to the fact that if you look at the tenant mix nowadays, there's this blurring of use of properties. So nowadays we see office space located in shopping malls. We see co-working space taking up typical retail spaces, right? Then we see offices appearing in industrial estates as well, and we also see retail appearing in industrial estates. So therefore, there's going to be a mix and match of use, and because everyone's going to be looking at the location with the cheapest possible rents, and because of that, there is a lot. Even though the yields are more or less about the same, if you look at the rents and the rent growth, I think you still expect the most rent growth in the industrial/logistics sector. This is not even taking into account the growing demand for logistics assets due to e-commerce, due to the increased demand for tighter supply chains around the world.
Interesting
So,
statistics here.
sorry, I didn't
Yeah,
answer
yeah.
the question directly, but just to answer off the question, if you look at in Europe, for example, in our own experience, interest rates in euros with negative interest rates, you could borrow probably around 1.5 to 2.5%, and then you get a 6% yield, so you could still probably generate a cash on cash of about 9% around that level. That's kind of been an experience, and our fund is generating those types of returns to back up that number. But this is simple math. If you look at the low interest rate environment in Europe, and that's expected to stay low for a while, even at 6%, it is still quite lucrative for investors.
Interesting. And a follow-up question to that, you spoke about Poland and some of the other exciting economies, newer markets. So the question is, are lenders taking a view on the newer markets like Poland, especially in the COVID environment?
So what we do, and it's important to note that when we buy real estate, actually when anyone buys real estate, the cheapest form of financing in any real estate lending is always the bank that is nearest to the real estate. So what I mean by that is the bank in the country where the real estate is located, because the bank understands the location, they know the tenants, they know the space, and therefore this is what we do. We go, let's say we buy in Poland, we go and get a Polish bank or a large German bank that has a big Polish presence, for example, to lend to our portfolio. We buy an asset in Spain, we go to a Spanish bank, preferably a bank that is very familiar with the area because we get the best rates. If I get a Singaporean bank, for example, to finance, they may be very keen to finance me in Poland, but rarely we find that the rates can be that competitive, only because they don't know the market so well, and therefore are unable to price it very tightly. So far we've seen in the real estate space, we have not seen any drying up of credit in any way. Banks are still very keen to deploy. We still get very, very competitive interest rates for the deals that we do. In fact, because if banks have to deploy capital, they're not going to be financing any other asset class other than logistics at this point in time.
Like there's a lot of tailwinds for the logistics sector. Now we want to spin it around and talk about risks. What are some of the biggest risks to investing in logistics assets, especially in this environment, and how do you mitigate them?
Logistics is, to a general real estate investor used to investing in the more traditional asset class, logistics can be quite a daunting prospect because if you're looking at office space, for example, even if you're looking at retail space or you're looking at residential, it's commonly held belief that people just look at where the prime areas are. You go to the middle of the city or you go to the CBD area, those are probably where you get the best value, you can get tenants, and therefore you should be looking at that. Some people are more adventurous, they go outside, but that's the general theme. Logistics is not really like that. You're not going to buy a warehouse in London city centre, for example. It's just not practical and it doesn't exist. Because you must understand the use of these assets. If you look at the picture and the backdrop, this is a typical logistics warehouse, single warehouse, right? In one of our logistics parks in Poland. So this asset is 500,000 square feet. It sits on a piece of land which is 1 million square feet. So that's single large property. So therefore, these assets have to be located where you can get this sort of land. But it's not just about land. It's not just about where the land is cheap, but also why is it there? The tenants who take up this space and they take up 5-10 year leases, why are they in this location? So logistics prime locations always revolve around the flow, the infrastructure, the connectivity. These are things which, if you want to look at logistics, you need to understand why a tenant is in a particular location, why assets in a particular location. Let me show you a few of maybe some of our assets so that I can share with you the rationale behind why we look at it and also the kind what we just discussed. So you look at some of our UK assets. You notice that we didn't buy central London, right? So we bought and in the UK for logistics it's very important to buy along the major highways. So in this case we are along the M6 on the left, and then we are along the A1M on the right. And these are the major road arteries of the UK market. And from these locations, they can basically truck their goods to the major population centers of UK within half a day or within 4 to 5 hours. Plus the fact that they're also located very near the ports. Because as you know, Brexit is something which is actually a very interesting development for logistics, because we have seen the growth of logistics because of Brexit. And because what Brexit has done in the UK is that it has disrupted the supply chain of many of the UK companies, for one. and as a result of which there is a demand for a lot of MNCs in the UK to, for one example, stockpile goods, stockpile supplies, because they have no idea what, after this hard Brexit deadline, what's going to happen. Are they still going to be able to get their supply from Europe? Are they still going to be able to get their spare parts, for example? So in the short term, there's a lot of warehouse demand in the UK market. That's just one aspect. The other aspect of UK market that's very interesting is e-commerce, because UK is the third largest e-commerce market in the world after China and the US. So everyone in UK is very familiar, with Black Friday, with Amazon, with various other e-commerce platforms. And because of that, the consumer market drives the demand for a lot of these logistics assets in this particular area. Yeah, so if you look at this area, these are not places you typically look to buy your residential property, for example, right? So these are not your typical, a typical real estate investor would say, okay, I want to go buy somewhere in Sheffield, for example. Nothing wrong with Sheffield, but yeah, that's not the first name that pops up to mind. But if you're looking to buy a logistics asset, these are the kind of places that we want to look at, because it's quite important to understand what is there and the purpose that it serves to the tenants that are there. If you look at our Poland assets, this one is outside the capital city of Warsaw. It's very near the railway. It's very near the new airport. These are the kind of places that you want logistics assets to be located, because for two reasons. Firstly, because existing tenants, they obviously want to be part of the flow of goods around this infrastructure. And secondly, in all these major infrastructure hubs, one of the important points to note for a developing country, or fast developing country, Poland being one example, as the airport grows, as the railway grows, as the infrastructure node grows, for example, the Ring Road or the A2 highway here is the one that connects Warsaw with Berlin. As these areas become more important, the real estate around these areas become more expensive. So if you're a long-term real estate investor, you have real estate in this area, maybe 2-3 years later, you won't see that much increase in value other than the increase in rents. But 5-10 years later, when let's say the port or the airport has developed to a certain scale, these assets become very valuable. So this is also long-term investing, right? You're looking at the development, the growth of these areas. And people say, why don't you just buy the capital city? Part of the reason is because these assets as of now are still relatively cheap. So you're looking at capital upside, you get a long-term growth. You're not looking to buy into a 40 market, although logistics is starting to be a bit 40 because everyone's looking at it. But it's still some way to go before it catches up with the rest of the real estate sectors. Look at the one in Poland. The other one in Poland, in Gdansk, where we have assets 10 minutes away from the port. And this is one of the main ports in the Baltic Sea. PSA recently bought it, and it's a critical infrastructure for the Polish market and also for the European market. Being located 10 minutes away this is like prime real estate as far as we're concerned. Because anyone dropping off their goods in this port will need a warehouse to put their items and then to sort and then to send out last mile delivery. So this is kind of how we look at assets, real estate assets, logistics assets. And these are the kind of things that the investor wanted to get into logistics. They really need to understand this aspect of it. How important is it to the tenant? How important is it to the overall flow? Because tenants who rent a 500,000 square foot warehouse, it's not someone that's frivolously going to move to another 500,000 square foot warehouse. The other thing about logistics assets is that, especially of those big box assets of 150,000 square feet and above, it's really not that easy to move. You got to find a warehouse that happens to be vacant at the time, in a location that works for you, because a lot of logistics companies they locate themselves in a warehouse which is part of their transportation network. So they've really calculated to the millisecond, right? Their truck goes from here to here, it takes how long, and they do this and that. If you move their warehouse somewhere else, everything has to change. So typically, once they're there, they're familiar with the area and the trucks know where to go. This is not something they want to change very easily. So this is a bit different from retail, for example, right? I can rent the shop next door. I can rent the shop 2 doors down the road, and I change regularly. Office, even worse, you can go up and down, whichever floor you want. It's not much of a difference. But logistics is very hard. It's part of their business. It's part of their supply chain. Once they're there, they spend a lot of time to understand the location. But once they're there, it's not that easy for them to move out. So therefore, in a way, that there's stability in that sense. But there's also, because of that, there's a supply. Supply is not that readily available in many markets that we operate in Europe for that reason.
Thanks, Enoch. You spoke quite a bit about Poland. I'm pretty sold about the prospects of that country. But I saw earlier in your presentation you had a map, and on your map you mentioned that Elite has chosen to invest in the UK, Germany, Spain, if I'm not wrong. Maybe you can give us a little bit more color about why do you think these countries are suitable locations for logistics investments? I mean, what other markets, maybe in Europe, do you think are interesting from a logistics standpoint?
Okay, so obviously there are many, Europe is made up of many countries, although it's a single customs union, and which makes it a very interesting place to invest because you have many peculiarities because of various different countries. In some cases, slightly different legal jurisdictions as well, but single currency, single market. So, so for example, the Poland story, which I was telling you about, Poland is, I'm not sure if I'm saying this the right way, but a lot of people look at this as a German proxy of sorts. Because if you are a German multinational and you have factories in Germany, you're gonna have, and you look a little, you just travel 10 kilometers to your right, and then the cost of labor is 1/3, and the cost of land is 1/3, and there are no borders, there's no tariffs. It's basically like your country, right, but a lot cheaper. So this is as a result of which you look at Poland being heavily dominated by a lot of German manufacturers. Automotive companies have been moving over to Poland, in the last 10 years or so. Then you look at their manufacturing businesses also moving to Poland. So Poland has become a bit of an industrial hinterland for Germany. And so that is one of the reasons why Poland is growing very aggressively. Poland is, as of now, the most, it's not just me saying it, but it's really the most exciting real estate market in Europe at this point in time. So what we see is a lot of very large real estate investors, institutional, private as well, are really looking at a lot of Poland real estate. So if you look at the logistics side, can't speak about the rest, but logistics, you look at people at BlackRock, Mapletree, GLP, all these guys have been investing a lot of capital in Poland, and in the case of many of them, Poland has a very large percentage of their portfolio for this reason, because they see the growth in Poland is likely to be probably outstrip those of many other European countries, especially the Western European countries. So one interesting thing about Poland is that although historically it was part of the Soviet bloc, and historically it was people consider it to be kind of like Eastern Europe, but nowadays they like to call themselves Central Europe, together with Czech Republic, and these two countries have actually broken away from the rest of the East and doing extremely well right now. Czech is the other market we're in. Interesting thing about Czech is that the yields for prime properties in Czech is as tight as you find them in France and Netherlands. So it's no longer a developing market. It is a developed market. You're paying developed market price. So therefore, these are things that if you're not in Europe regularly, you don't look at the map, and you're not invested there regularly, you don't see these opportunities, right? But the opportunities are there, and a lot of smart capital is already in these markets investing. The other thing about Poland, there's something probably was news to me as well when I found out. They have a very strong, they're one of the fastest growing economies in the world, large economy in the world, just behind China, India, Indonesia, and clearly the fastest growing in Europe. So for that reason, real estate is a very good investment class to get into in the fast developing country with a growing GDP of 4 to 5% per year over the last 10 years or so. Real estate is really one of the most exciting investment classes if you look at it from that perspective. Now, of course, as I mentioned, Poland has a strategic advantage because it's part of the One Belt One Road initiative. But amongst that, that's not all there is to it, right? So you have that as an entry point for China into one of the entry points. Of course, China goes through Greece as well through the shipping route. But Poland is one of the main routes overland. But it also have the benefit of Germany as its neighbor. Germany using its cheap land, and relatively cheaper labor. But also Poland has a very educated workforce, English-speaking workforce, which makes it very ideal for large MNCs to base their offices there. So Amazon, for example, in the last 5 years or so, have built 7 mega warehouses, logistics warehouses in Poland, and that's it's grown more in Poland than anywhere else in Europe in the last 5 years. So that once again, we are not, we like to follow, we like to see what the smart guys are doing, and people at Amazon are investing a lot of money in Poland. We want to be there as well.
And you mentioned that Elite was looking at Spain as well. So I see you have some summary on Spain. You want to give us some color on that?
Yeah, Spain is also an interesting logistic market. some people, I mean, including myself, a little bit cautious of Spain in the beginning because all the negative things you hear about them during the Eurozone crisis of 10 years ago. They were one of those countries that nearly went down, right, together with Greece and to some extent Italy. But Spain has bounced back quite well. It is also, what's interesting about logistics in Spain is that in the European Union, it's one of the countries that adopted digitalization fastest. Here's a very young population. E-commerce is becoming very strong in this country. And that's driving a lot of the logistics operations. I add to that that Spain, in its location within the European Union, is one of the lowest labor costs in Western Europe. And so as a result of which, it is also a huge manufacturing base, plus the fact that it is also one of the largest agricultural bases in Europe. So it makes and it grows things which it then needs to sell to the rest of Europe. So therefore, logistics important once again. Plus the fact that it also has the benefit of having the Atlantic Ocean and the Mediterranean Sea, and so seafood, for example, is one of the main food exports through the Spanish market into the rest of Europe. So that's why we like the macro, right? We like the fact that if you want to buy logistics, you need to be part of supply chain. You need to be where goods travel from one point to the other. You want to be somewhere around it, either between the hubs or somewhere in the middle. So these are the kind of themes that we look at when we decide whether to enter a market to invest.
That's very interesting. Now, given the geographic spread of all your assets as well as the targets for your future growth, how have you being Elite, built your asset management team and infrastructure? And do you have ground teams on the ground to manage the leases and so on? So maybe you could give us some color on that as well.
Unfortunately, the growth of technology hasn't reached the stage where I can buy assets just by clicking a button at home in Singapore, right? So real estate is still old-fashioned investment business. You have to go down, touch the building, walk around the building, understand the flow, look around the surroundings to see who the tenants are, because you also need to understand if your tenant moves out, who's going to lease the space, right? So you need to see your neighbor is who. Is it Tesco? Is it like Amazon next door or DHL? So these are the kind of things that you can't really do offline. You can't really do, from home or anywhere else. You have to do it. You need to be on the ground. So we do have teams on the ground. We work with asset managers, a variety of asset managers on the ground, and we have our own employees as well in each market. And obviously, it's a big continent. We can't be spread so thin, having one guy running around. So we have teams managing various different markets. Because it's not just about, real estate is not just about you buy and then you just forget about it, right? You need management. You need to have a relationship with your tenants. You need to understand what their needs are. Okay, for logistics, leases are typically quite long. You can have them 5 years to 15 years in some cases. But that doesn't mean, you don't want to have a relationship with a tenant, because your tenant may want to develop another warehouse somewhere else. And so this is an opportunity for us to go and build something else for them, just to maintain the relationship. So these are things that we have to do on a day-to-day basis.
So clearly there are a lot of compelling opportunities in some of these markets, UK, Germany, Spain, Poland. Obviously, this would have attracted the attention of some of the more established REIT companies around the world. So how can you as Elite compete? Right? How do you compete with the behemoths, right, in the REIT world for logistics assets in these markets?
Well, a few reasons, a few things. Firstly, I think we have been quite fortunate. We've been very lucky. So luck plays a very big part of everything we do. We will never discount that. So sometimes you're there at the right time, you make the right decision, things work out. But behind it, obviously, there's a lot of hard work. But the market is big, right? You're looking at the European Union with 500 million population and many different markets. Logistics asset class in Europe is still quite nascent. It's still growing, right? And there are a lot of opportunities still. One thing we have noted is that there are a lot of very large, as I mentioned, very large players in that space, all the names which I mentioned earlier. But because of the nature of their size and the nature of the way they acquire assets, they tend to buy portfolios. So it's very unlikely you see a BlackRock going to buy a $20 million asset, 20 million euro asset, right? They want to buy a 2 billion euro asset portfolio because that's what they do. Whereas for us, we're niche. We are on the ground. We buy asset by asset. We build a portfolio. So there's a lot of value in that because it's a lot of work. So the reason why large firms will do that is because they deploy a lot of capital. They just want to do the work one time and then have a very big portfolio because they got plenty of money, right? But for smaller guys like us, it's very hard to compete in this space. We can't bid. We can, but the chances of winning not that high. But to go up against those guys with deep pockets and try to bid on a 500 million portfolio is very difficult. So what we do is we go and buy individual assets, and there's a lot of things we do to ensure we get best value. So we look at deals that are off market. We try to look at opportunistically buying things when the market is not so good, and then doing a little bit of enhancement in some cases. These are basically the kind of things you expect from a real estate property manager, right? Not just to buy assets and then sit on the yield. There's not much value added there. But the ability to source assets, the ability to buy even the smaller assets, put them together into a portfolio, and then the portfolio in itself has value, because that is something that the big boys are looking at. So this is kind of our model. This is what we're doing, and this is how we see us creating value.
I wanted to ask you, one question around the defensive characteristics of real estate, right? Because obviously real estate has established itself as a defensive asset classes, but that would, in most cases, mean that would it significantly underperform when the COVID situation turns around in bullish scenarios, for example? And how would the logistics sector as a whole be expected to perform under various macro scenarios?
So very, very good question, because I think we've seen, at least in Singapore, if you've been following the market 2 weeks ago, you've seen a lot of the logistics/industrial REITs share price take a little bit of a hit. Not because there's anything wrong with them, but because suddenly the vaccine news was announced and everybody started reallocating capital into high growth equity stocks, right? So this is pretty normal in the scheme of things. Doesn't mean the asset class is bad. It just means that everyone has been investing in logistics, right? Now things start looking interesting, so they start moving their capital out. Logistics asset class, as I mentioned, we have been looking at this for the last few years, even before COVID. And it was already a growing asset class even before COVID. So if I were to show you this European logistics investment, so even before COVID, it was really growing at this rate. So COVID has basically focused everyone's attention on it. But it doesn't necessarily mean that it only does well during the COVID period. Let me give you 3 examples, 3 kind of scenarios, right? What happens, let's say, in the next 18 months or 24 months, depending on how this pandemic thing plays out. Let's say COVID doesn't go away. Let's say we have this prolonged COVID pandemic. It's going to be there for the next 2-3 years. So obviously logistics good place to be, because everyone is then locked up at home, and then basically the same story, right? Supply chain is disrupted. There's a run on toilet paper in supermarkets, and food delivery becomes more important. All our tenants that are in the supermarket space will do extremely well. E-commerce becomes hot. So that obviously is a big plus for logistics. Now, let's say if the vaccine gets discovered, what's that mean? And that is probably something that a lot of investors are trying to, probably the gist of your question just now as well. How does this impact the logistics market? At least in the short to medium term, what we've seen for the vaccine issue, right, is quite interesting. It will actually result in a spike in demand for certain types of logistics assets, in particular those near major infrastructure points like airports, and also those with cold storage facilities. Because what is now obsessing the world, many parts of the world, especially the US, Singapore is also thinking about it, the UK, Germany, is how do we get these vaccines to everyone in the world? And that's going to, from what people say, it's going to take anything between 4 to 7 years to get everyone vaccinated. And so the vaccine is obviously not something you can just pack and send through the mail. It has to be kept under certain conditions, distributed in a certain way. And that in itself is going to be a sub-theme which is going to be very hot. And that's something we are also looking into right now. How do we get on this, right? How do we get involved in this? Is any of our space usable for this sort of vaccine logistics? And that is going to be driving logistics operators quite heavily in the next few years. I got some data here, right? So if this is public information, if you were to look this up, DHL has really started working on a white paper. How do they distribute logistics, and what does that mean? So if you look at this, right, just in a nutshell, there's a lot of activity for logistics in the next 5 years or so, just because of this vaccine. And that's going to be driving the growth of this logistics, at least in the short to medium term. And what happens after that? Let's say everyone's vaccinated and then we're all back to normal and everyone's going back out again. And then what that means is that we'll go back to the old days of growth, high consumerism, which then requires more goods to be supplied to people. E-commerce is going to grow, people are going to buy more things, people are going to spend money again. So net, if you look at the logistics space, we see this as a one-way trend. It is defensive, yes, but it's not like gold, for example, where you only buy gold when things are really bad. It has not much value when things are really good. where in this case, logistics is still expected to provide very strong returns. It has the benefit of having benefiting from a very stable, high growth consumerism market, and also a very stressed supply chain disrupted, pandemic affected kind of situation.
Thanks, Enoch. I think we have just about enough time for one last question or maybe two. So Enoch, you mentioned earlier that Elite focuses on the smaller bite-sized assets, right? What are the returns on these compared to the bigger assets, for example, 2 billion or more?
Well, I mean, it really depends on the type of assets that we have. Generally speaking, if you look at the yields in Europe, you're looking at depending on the countries, you're looking at between 4 to 6%, 4 to 7% depending on the country, 4 to 7% gross yield on assets, right? Then of course you get some debt on it, and maybe you can get 9-10%. But that's not just all the returns, because that is just a typical real estate. You buy real estate, you get a tenant, you get a bank financing, then you make a certain type of spread, right? But in the logistics space, the kind of growth that we see is twofold. Number one, the yield keeps compressing. More and more people looking to buy space. Secondly, rentals keep going up, because as more and more companies adopt e-commerce, as more and more companies require more space to distribute to their clients, the supply of assets in the market is just not keeping up, right? Anecdotally, let me give you one example that we have seen. So we had a very large global tenant in one of our assets in Poland that was meant to, the lease expires next month, actually in December. It was supposed to be moving to a new facility that they built themselves. So therefore, we were going to lose this tenant. But because of COVID, and what COVID has done in the entire of 2020 is that it's put construction at an absolute halt. So no one's building anything, right? As you can imagine, anywhere in the world. So any projects that were meant to come on stream this year is not coming on stream this year. It's going to come on stream maybe next year, maybe the year after. So what does this mean? So if you're a landlord right now, your tenant is moving, he can't go anywhere, right? So what we managed to do in this case is to extend the lease for this tenant, because he can't go anywhere. He can't vacate because he doesn't have somewhere else to go. That is obviously not just something that affects logistics, but various other sectors as well. But this is just one example of how there's a supply crunch and the demand is just keeps growing. So as a result of which, this is something which will benefit us, of course.
As an investor into real estate funds focusing on logistics sector, what should I look out for in a fund manager?
Well, the fund manager needs to be able to make money, right? That's the first thing.
Of course.
So it's not just the promise of making money, it's also the ability to demonstrate a track record of returning your money with the returns. And that is a very key thing. And it's something obviously very important to us as well. So we have to prove ourselves and return capital to our investors with the requisite returns. So that's the first thing. And secondly, obviously the ability to acquire assets. So you can raise all the money in the world, but you can't deploy your capital, which is a problem sometimes, right? So you can't buy and then you will return money to investors. That's not great. So you need to have a track record. You need to have a sourcing capability to acquire assets, the right assets, of course, to do the diligence and all that. The technical part of a fund manager is taken for granted because obviously you expect them to be able to do what they say they can do. But these other things like being able to source for assets, being able to create an exit, and more importantly, also to manage the assets on an ongoing basis. So the investors should be looking out for managers who can manage the assets through thick and thin, right? Because sometimes things don't go so well. Let's say tenant leaves or there's a problem with the property. So is your fund manager capable of fixing the problem? Are they able to deal with it? Have they got track record? For example, have they got track record negotiating lease extensions? Right? Because easy to buy, but then when the tenant leaves, then what do you do with it? Do you know how to extend the lease or get someone else? So these are things that you kind of look at to ensure that the manager can look after the asset properly. And then the last thing is good to have, not always necessary for a real estate fund manager, is the ability to develop. Because there are instances, right, where you buy a piece of property and we don't always buy the newest property. We got some assets that are brand new, but we also got some assets that are 30, 40 years old. So sometimes the tenant leaves and then you look at it and like, okay, so there's a lot of potential, there's a lot of land. Maybe we can redevelop this and then increase the value of the portfolio because to give you one example, we have one asset we have been leasing out at below market, way below market, right? At about £3 per square foot per year, by the way. This is the thing about, one thing, interesting fact about logistics. When you talk about rentals, is per square foot per year. And if you just imagine to yourself how cheap that is, relative to office rents, which are on the per month basis, right? So in office you pay even £3 is very low. You pay £10 per square foot per month. In this case, you're paying £3 per square foot per year. But I digress. So if renting a property that is at £3 per square foot per year, if you had an opportunity to build a new building or to maybe renovate it a little bit, and then you can rent it out and market at £6 per square foot, and that increases value for obviously for the asset owners and also for the fund. So you need the fund manager ideally to also have the ability to look at these opportunities, because it's not just about buying asset, collecting rentals, and then returning everyone the nice dividend. But you have assets, right? Some of the assets you can do more with it. You can realize more value in it. And so I think these are the key things I'm not saying we can do all this extremely well, but we will expect that from any real estate fund manager, and we certainly aspire to be like that as well.
Very good. Thank you, Enoch, for your insights. This brings us to the end of tonight's webinar, and I'm sure you agree with me that we've gained a much deeper insight into the space of real estate investing tonight. So a big thank you to Enoch and our friends at Elite Partners Capital for taking their time out to share with us. And on behalf of iStocks and Elite, I wish everyone a very good evening.